I get asked all the time, is refinancing a good option? Should I do a refinance or a home equity line of credit? My question is always, what are you going to do? And most people say they want to pay off debt or pay down debt. Well, I always tell them, absolutely. But let's really look at your debts versus the cost of the refinance or the cost of the home equity line of credit. And then in addition, once we get into this discussion, we say, well, how do we make this better? Sure, we can refinance and pull cash out. Sure, we can get a home equity line and pull that lazy cash off the couch and send it to work. But what if we could then put it one place different? What if we could change where that money went first and then we send it to pay off the debt? And if we did that, what if we can earn interest and dividends on that money for the rest of our life and we never have to work any harder to do that? If that sounds interesting, what I'm talking about is called the money multiplier method. Let's dive in. My name's Chris Naugle and I'm here to teach you how to be the bank. Let me say that in a different way. What if you could pay off all of your debts with money you didn't even know you had? Because that's really the dynamic and the magnitude of what we're talking about, because you've got money in your house more than likely and that money's not doing anything. So today what we're going to do is we're going to talk all about the money that isn't being used that will actually help you. So let's dive into what that money can do. You see, the first thing is people allow their money to sit lazy on the couch while they go to work and they work hard trading hours for dollars. Does that make sense? Is that what you want to do the rest of your life? Your hours are priceless. And we only have so many hours in the day, 24 hours to be exact, which means we have so few of them to trade. And the more we trade, the less freedom we have. So we got to change that dynamic. And the best way I have found to do that is to make our money work for us. You can do that because as long as you've got a house and you've got equity in that house, that money is ready and willing to go to work for you. But the first thing we got to do is find out, how do we make that money work? So let me talk to you about a friend of mine. So this person has a house like many of you do. And since COVID and since everything that's been happening, their house has gone up in value. Surprise, surprise. They're sitting on a lot of equity. And when they talk to me, this is friends, so I don't usually do business with friends. It's just a weird environment. So when they talk to me, they were saying, hey, I think we're going to refinance the house. We're going to take the cash out and we're going to invest it in the stock market. Well, that is like nails on a chalkboard. This is my friend. And I'm like, oh my God, where do you get this stupid idea from? Well, they got it because they were listening to their neighbors, their coworkers who have no experience, no knowledge, and no wisdom in stocks.
Shut up. You don't know nothing but anything.
They're just following the herd. They're just conforming to what everybody else is telling them to do. So therefore, my friend is just conforming to what they're being told by a bunch of mindless people jumping off of a cliff. Sorry to put it that way. But when I thought about it, I said, hey, don't you have a bunch of debts? Oh, yeah, but we're going to take the money from the refinance, put it in the stock market, and the markets are going to keep going up. So we're then going to eventually cash out and we'll pay all the credit cards off. That's completely backwards. So you're going to take money, which is your house. You're going to take that money out. You're going to put it into a risky asset, which if you listen to anything I say is absolutely the worst place you can put it, because right now the markets aren't going up, they're going down, and they're going to continue to go down, down, and down. So you're going to put your money in this vehicle, in this stock that's more than likely going to go down. Then how are you going to pay your debts off? You're not. And then when the recession hits, if anything goes wrong, if you lose your job, your income changes, now all of a sudden you can't cover your debts. What I want to explain is what I told them. The equity in your house is something that absolutely should and needs to go to work for you. But it needs to go to work for you in the right way. If you take that money and you take it and put it in something like gambling, in the stocks or crypto or something else because you're seeking an unrealistic return, the chances are your money's going to flee you. That's a law. It happens every single time. The best thing to do would have been for them to take the money out of their house. Now, I understood why they wanted to do the refinance because they wanted to spread those payments out over 30 years. But it might have almost made more sense for them to just get a home equity line of credit. But they didn't do that, or they didn't want to do that because they were worried about interest rates going up and the cost of that line of credit going up, which is probably absolutely smart of them to understand that, but they weren't really looking at the whole picture. Even though the cost on that home equity line would go up, it still would never probably outweigh the amount of the closing costs for that line or that refinance. You guys ever look at the closing statement on a refinance? When you refinance, this is why banks and mortgage brokers love to do refinances. They're loaded with fees, usually about $5,000 or more in extra fees just to do that. So if we were to take that $5,000 to refinance and figure out how long would it take for that extra interest? Let's say your line of credit your home equity line went from 3 to 6. How long would it take for that difference to equal 5,000? I bet you if you ran the numbers, which I didn't, it would be a long time. 10 years probably. So by getting the refinance, locking in the rate, because that's what you were so concerned about is interest rates going up, which interest rates go up and then they go back down. Versus just doing the home equity line and playing the game, they incurred extra costs. They should then have taken that money and put it into their own banking policy. But let's just skip that step, and they just pay the debts off. And if they just took the money that they were giving to those debts, and instead of putting it into the stock market, they took the extra money they were paying the debts, and they put that money back toward their mortgage or back toward their home equity line of credit, they wouldn't have much debt in time. But that's not the story. What they did is probably what they initially planned to do. They followed the herd. They probably put their money in the stock market. I haven't even talked to them or asked them because I just stay out of that. But that's probably what they did. They'll never sit there and say, oh, yeah, that was stupid. Oh, yeah, we're down. Too much pride. When people lose money, they don't want to talk about the losses because, oh, that hurts. That's pride. It's just sad sometimes that we can't help the ones we love the most. The other issue with the equity in your house that's really important right now is you're either going to use it or you're going to lose it. Because although your house is going up in value now and has for the last couple of years, the next phase means your house is going to lose value. Because when we go into deflation, your house, wherever it's worth today, will not be worth that tomorrow. So if you haven't gotten a home equity line of credit or haven't refinanced and pulled the cash out, next year, that opportunity might be gone. So my question to most people is, why haven't you done it already? The third thing that's important to understand is there's no cost to have access and control to the money that's sitting lazy on your couch, which is your equity in your house. If you do a home equity line of credit, there are tons of banks out there that will give you up to 90% of your loan to value or your appraised value is the better way of saying that. So whatever your house is worth, they'll give you 90%. And they won't charge you anything. They'll charge you interest when you use the money, but there's no cost to get access to that money. So why haven't you done this yet? I don't know. I always ask this question. And once you get it, you're in control of that money. But don't take that for granted, because if that money just sits there, the bank can freeze that line of credit. Oh, you don't think that can happen? Well, why don't you just go back in history to 2008, because that's exactly what happened. Or how about just back to the pandemic? That's exactly what happened. There was banks freezing lines of credit. Wells Fargo was one of them. You had a home equity line of credit. You didn't use that money because you couldn't figure out how to make that money go to work. And then all of a sudden the bank just freezes it. Now you no longer have access to the equity in your house. And you're saying, I shoulda, I coulda, I woulda. Don't do that. I want to talk about something that happened in my life. So my mother, who raised me, she didn't have much. We never had much growing up. She would save money in a glass jar, and I would watch her do this. And when she needed to buy something, me and her, when she saved enough, we would sit down and we would roll all those coins. And when she had enough, she'd go buy the thing she wanted. I watched this. I was fascinated with how money grew in this little jar. So she bought me this little box, and I started saving money of my own to buy the things that I wanted. It was a fascinating little thing. When I was 17 years old, I had this big dream. I wanted to start a skateboard snowboard shop called Fat Man Board Shops, but I needed $70,000 to do this. So when you're 17 and you need $70,000, what do? You go around and you ask everybody that you know, everybody that you love, hey, can I borrow 70 grand? Hey, can I do this? So I went to my dad, my uncles. I went to everybody I knew, and everybody said no. My father said that's a crazy idea. Everybody shot the idea down. Some of them even said, which today I realize was them getting me to conform to their failed dreams and failed realities. But some of them even said, let me get you an interview at the job or at the factory where I work. That wasn't my path. That wasn't what I wanted. I wanted to create my own company, my own destiny, my own dream. I didn't want to live their failed dream and go work at a stupid factory. There was a huge disconnect, but that's all they knew. You can't fault them for that. But they're conformers. I was a creator. So during this whole thing, my dream almost died for this store. My mother watched this happen. So there was this one bank that said, we'll give you an SBA-backed loan, but we need collateral. I'm 17. I didn't even know what collateral was. When they finally told me, oh, kid, we need something that's going to collateralize the loan, something of value, I'm like, oh, I got a 1986 Buick Skyhawk, I got a KX 125, and I got this awesome baseball card collection. Come on, can I get 70 grand? And they said, no. We're thinking something a little bigger than that. So I told my mom this, and pretty much that was the last step. I had nowhere else to go. When my mom heard this, didn't say much, and she came to me and she said, Chris, what if I put the house up for collateral? What if I used the equity, which was about $72,000 on her 700 square foot 2-bedroom house, where she still lives today? What if I put that house up for collateral? I'm 17. I'm like, you do that, Mom? Yeah, let's do it. And that gave me my start. My mother's generosity, my mother's giving nature is what gave me that start. I tell this story simply because my mother had the equity in her house. She didn't know anything that I'm talking to you about. She didn't know any of this stuff. But she knew that giving was an important thing. And she put her house on the line for a punk 17-year-old kid, which is a really stupid thing. And that's a big risk for a woman that had to save her spare change in a glass jar. Can you imagine if she didn't do that? Can you imagine if she didn't use the equity in her house to help me get that start? Where would I be today? Well, I don't know why I'm asking you if you can imagine, but I'm thinking to myself, I don't know where I'd be. Well, in your life, what is the equity in your house going to do? Are you just going to leave it sit there until you no longer have access to it? Till then you go down and you say, oh, I should, I could, I would. You start bitching and moaning that you didn't use it and, the stupid bank took it away. No, that's your fault. You had that opportunity and you didn't use it. So I hope you enjoyed my stories. And if you like this video, make sure you check this one out. How to get started in multifamily real estate investing without the headache. You'll like it. We'll see you on the next one.